What's good, traders? Welcome to another video in the bootcamp. If you're new to the channel, make sure you like and subscribe. If you would like to join my community, make sure you click the link in the description below. Today, guys, we are going to be look at stop losses. Stop losses is something that could be a good friend or it could be a worst nightmare. And the reason why I say this is because a lot of us want to hold that trade till it hits take profit. But unfortunately, price doesn't always go in our favor. It doesn't go in our direction. So when we are trying to hold that trade, the stop loss comes in handy to stop that trade. But unfortunately, it puts that red mark on your trading journal and your trading platform. No one wants to see negatives in their trades, right? But unfortunately, for us, we have to. And as a trader, L's are something we're just going to have to swallow. I wish I could be a 100% positive trader, but that's not the case. However, we can place our stop loss at certain areas to prevent stop loss getting hit, but also letting the trade play out, even though if we're in drawdown or not. So I'm going to show you a few examples, and just bear in mind, guys, these are not signals, these are just examples, and you should always practice this before you try it out on your real account. Okay, so always practice this method. So let's say, for example, for me, I like to go for double bottom, head and shoulders, all those lovely strategies. So straight off the bat, we could see a double bottom right here, double bottom being formed. And so obviously we're not going to look at, I understand that you can clearly see that price has gone downwards, but just for example purposes, I just want to quickly show you where we could keep stop losses and how you can prevent yourself from getting stopped out. So let's say, for example, price has, created structure, boom, 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 and now we are forming this double bottom right here. So what we do is we can, let's say, go for a buy, double bottom. Let's say we go for a buy at this bullish engulfing candlestick. Where would we keep our stop loss? Well, it's very important for us, and this is a rule that I always keep, a few pips, below the previous low if we're buying, and a few pips above the previous high if we're selling. So for example, in this one, the previous low is here. And so I would put my stop loss just a few pips below. Why? I don't do this for any random reason. The reason why I do this is, let's say price does decide to go down. What would we have seen over here? Well, let me just go on settings, style, no, there we go. What would we see? We would see a break of structure, and that means price is going to the downside. So our stop loss is not always going to be at a random level. It's always going to be at a level where it could potentially be a break of structure. And in that case, we do not want to be part of that trade. You never just keep your stop loss. Oh, I'm going to keep my stop loss just below here, because price can easily come to your stop loss and then rebound and then continue to go to the upside. So you always want to keep your stop loss at a level where there could be a significant break of structure, which is obviously previous low or previous high. And then you also want to just keep it a few pips below, just because there could be some sort of liquidity sweeps. If you haven't seen the video for liquidity, go back a few days. If you don't understand liquidity, go back a few days. We have spoken thoroughly about liquidity and how it works within the market. But when it comes to stop losses, it's very important that you give it some room. And this is very important because now, when you're doing your stop loss, you now need to see, is this trade a good setup and can it fulfill your 1-to-3 risk or ratio? So for me, let's say, for example, I'm trading, I'll probably go for these highs right here as a target, right around this area, or the next key level, which is 1.04. We will go to 1.04, have a look. Okay, it's 2.73. I mean, that's close enough to 1-to-3. We can put it like a 1-to-3, and then we'll keep it at 1-to-3. And boom, that's a 1-to-3 risk ratio trade. And you can see that we clearly start to hit our take profit. However, if I kept my stop loss really, really low and really tight, you would see that price actually hit my stop loss. And comment down below, guys, if this has happened to you, where prices hit your stop loss and then goes directly to your take profit. It's happened to me numerous times. And because of that, I've learned a valuable lesson is always keep your stop loss below the previous low. Yes, it's not giving you that sniper entry that you want. Yes, your stop loss is going to be a little bit wider compared to what you need or what you want, but this is what's going to keep you in the game for a long period of time. Now, I actually don't look at trades as sniper entries anymore. Like when I started off, I looked at trades like, oh, I need to get sniper entries because I can risk more, or I need to get to hit certain trades and I want it to be really, really tight stop loss. And I'll try get like trades where, like, let's say for example, I'm targeting this low. I would like to have a trade where it's like it taps my entry and then continue goes to my take profit. But unfortunately, I've learned that markets not like that, guys. Markets is not easy routes. And so you're always going to find your ways, especially when you're entries, you're always going to find that you either enter too early or too late. And sometimes you might have them entries where it just goes directly and take profit. Like I've had many trades like that as well, but not all the time. And we can't predict those trades. So it's always good to always have the stop loss below the previous low. And a good tip for you guys is mark down the previous low. So for example, if I'm trying to sell here, right? Obviously, I'm going to mark down the previous high. So first thing first, what I would do is I would mark down the previous high. Okay, cool. Then I can see that we got the left, right shoulder. Okay, cool. I'm probably going to enter after this bearish engulfing, which I would, let's say we do, right after here. Yep. Now, where would I keep my stop loss? Well, I'd keep my stop loss above the previous high, which was over here, right? And then we will continue to try and get this to a 1 to 3. 1 to 3. And now, as you can see, this 1 to 3 doesn't seem as realistic because we're looking for 73 pips. So then what I would do is this a good probability setup? Not really. I'll probably wait for a new structure to be formed. And then you can probably enter a little bit later and keeping this level. Keeping this level now the new high, and then now keeping a stop loss nice and just a few pips above, and now you can go for that 1 to 3, which gives you let's go for it, 1 to 3 right here, and you can see we end up smashing it, right? So this is where patience comes in, and I always say that the best thing to do is figure out where your stop loss is going to be before you even enter the trade. Like before you even look for 1 to 3 risk to ratio. Like I know everyone, you know, even for me, I'm like, okay, when I place a trade, I'm going to look for my targets. My targets are so important. But what's more important than target is your stop loss. So always give myself like a few more minutes to really evaluate, is this stop loss correct? For example, if I entered all the way here, even though it's like it's pretty much the same entry, right? But after a few more pips, you can see we had that breaker structure on a lower time frame. We had the retest, and now we can put it right here. However, if we entered here, we would have had to put it maybe even at these highs or even at these highs, which is not really the best position. And so you need to understand that sometimes even just giving yourself a minute or two to really evaluate where is the best positions to trade from. Even like over here, just a simple break and retest, right? Break and retest. We can see that price is forming. So straight away, what I'll do is I'll put a break and retest, you know, break of structure right here. Break of structure, right? That's a horrible break. So where is the one that I use? I think it's here. Break of structure right here. Right, breaker structure, there we go. Breaker structure right here. I'm seeing price starting to pull up. Okay, cool. Let me look for my entry now. Okay, tweezer top, right? Tweezer top, and we have price, you know, basically creating a lower high. I already know that my stop loss most likely would be above here. So I'll put my line in, ready. And then what I'll do is probably scale into a lower time frame maybe, which you can see lower time frame. You can clearly see we're getting some sort of formation, not looking as good. Probably get my Fibonacci tool out, see, is it giving me some sort of entry? Probably go back on the 15 minutes because I do like entering on the 50 minutes. You can see, yeah, we kind of have 61 extension right here. We had a liquidity sweep at these highs right here. Most likely, okay, let's say to the top. Let's just say example purposes, not the best setup, but let's just do it. We go for a sell right after here, right? That's actually a bearish engulfing candlestick as well, so pretty cool. Stop loss above here. Now, the Fibonacci is telling me put my take profit 1 here. That's not possible for me because it's 1 to 1.32. The second TP is here, still not enough. I want a 1 to 3. Let's go for a 1 to 3. Does this seem realistic? This is a 1 to 3. Does it seem realistic? Well, it's around 62 pips. Euro USD moves around 50 to 60 pips. So, I mean, this is realistic. Probably hold it for a little bit longer. But obviously, news also occurred at this time. So that's why this is FOMC. So you can clearly see news just pumped it down. But even if price decided to go a little bit higher, let's say it decided to go a little bit higher, my stop loss is super clear. And let's say it did this instead, we still have room for price to breathe. It's always important, guys, to have price breathe. You don't want to keep your stop loss super tight, because let's say there is a wrong move, and there is a wrong move all the time, right? Price can easily, and there's no reason for price to not go up here. Like, price can come up here, test these highs, and then go down. So if you have your stop loss here, you would have just missed out 62 pips because you kept your stop loss too low. However, if you kept it here, you know that the only reason this could be an invalidated move is when price goes above here. Literally, if price decides to break these highs, right, we now know that this is an invalidated move, and most likely it's going to retest and continue to go to the upside. So your stop loss always has to, when it hits your stop loss, it means your price has given you an invalid move. That's how it should be. It shouldn't be, I am going to put my stop loss here just because I don't want to risk too much. I want to use a high lot size. I want to go for that 1-to-5 risk to ratio. That's not going to happen. Obviously, in this case, it did, but it's not always going to happen. And I can probably show you like trades, like for example here, right? Price comes down, boom, boom. We see some sort of, price starting to go down. Let's say I then go for a sell, right here. Now, every trader is going to be like, okay, stop loss just above here, a few pips above here, right? Take profit all the way down to 1 to 3, right? Now, look what happens. You get stopped out. Why? Because this is not previous high. This is still the leg of this, right? This is still the leg. So we need to locate previous high that's above here. Well, the previous high that's above there, we could say is possibly maybe like here, right? This pullback up and down, right? So then it's like, okay, cool. We have to keep our stop loss just above here. Now look, even though it's spiked up, we're still in the clear. And guys, this is only a 20 pip stop loss, so it's not even that large. Obviously, you can see that the 1 to 3 risk to ratio is a bit more wider, it's a bit longer, right? However, you can see that you can hold it for as long as possible and you still have a valid trade. Like, having a stop loss up here keeps this trade going. It literally keeps going. Yes, it was from Tuesday 5 p.m. all the way to Wednesday 6 p.m., around 24 hours. But I mean, you didn't have a loss in this trade. We can't predict that. And the reason why you didn't have a loss in this trade is because you know that if price goes above this high, that's it. And eventually, after this high has been created, you can actually move your stop loss a little bit more tighter and then just let price play out. In this case, this is literally a psychological test trade, because you can see it goes in profit, then goes to stop loss, then goes in profit, then goes to break even, goes in profit again, goes back to break even, then goes more into profit, and then eventually it goes and smashes TP. But you're gonna notice that trades do this all the time, like even here, right over here as well. Just for example purposes, let's say we just sold right here, right? Where would I keep my stop loss, guys? Well, previous highs would be, well, this is a high. Okay, cool. Is there any other previous high compared to that? Yeah, there is a previous high here or here. Cool, let's have a look. Let's just keep our stop loss here because this is the previous high. We go for a 1 to 3. 1 to 3. You can see actually we had a 1 to 3. However, this is a 1 to 3. However, price is obviously, it almost hits our take profit, but doesn't, ends up taking our stop loss. Doesn't matter, we take it L, but you had a breathing room with your trade. Now you can back test this. It's always test out, see, okay, previous high. Even if I did keep stop loss just above these highs, we probably would have got stopped out anyways as well. So there was no point of that trade, but you guys get the gist, like making sure that you keep the stop loss at a certain level, because no matter, and I always, emphasize this, your stop loss is way more important than your target. Yes, the target is the exit plan, but your stop loss is also part of that exit plan. So I think you guys, like, even for homework, I recommend you guys to really practice. Forget about the trade itself, like forget about the whole entries, and obviously look for entries first, obviously, but look for stop losses as well. So for example, if I want to enter within the zone, right? Let's say I go for an entry. Let's say I go for an entry right here. Where would I keep my stop loss? Well, if to make this move invalidated, I wouldn't want the trade to go below these lows, right? I wouldn't want the trade to go below these lows right here, right? Right here. I wouldn't want trade to go below these lows, so I'll probably just keep it just as tight over here. Not too tight. Obviously, a few pips below. Remember, keeping that few pips below, and then you can go for 1 to 3 with the ratio, and boom. And if you notice, guys, as well, you will notice that I never set my targets first. I always put my stop loss first, and that's actually a really, really important thing. Never ever, and I've done this in the past where I've always had my targets ready, my entry ready, and then the stop loss is like, oh no, my stop loss is tied like this, and it's like terrible, probably got stopped out. Obviously, this again, amazing trade, but you're gonna get times where you get stopped out. So even if price does come down here and then go up, like it can do that. Gonna be it's not going to be invalidated. The only time price will be invalidated is if price goes below here, because now we're creating new lows, meaning that we could possibly find better entries. So when price hits your stop loss, it doesn't mean you're a bad trader. It just means that you've entered a bit too early, or you are on the wrong side of the market and you could just find a better entry after that trade. However, if you keep your stop loss at a random location, when you hit stop loss, you're not going to get that feedback. All you're going to see is that the trade just was not valid and you're not going to be able to rebound off that trade. And most of us go through that. Most of us go through trades, and when we get stopped out, we don't know why, and we're confused and puzzled, and then we're trying to enter a revenge trade. Every time I trade, I always make sure I want to get feedback back from the market. I'm not going to place a trade if I feel like there's no feedback coming from the market. So if I'm placing a trade and it just doesn't make sense and it's not a logical trade, I'm not placing it. And it doesn't matter if it's a plus setup. If my stop loss doesn't look like it's at a logical place, like for example, if I'm going for a buy here, my stop loss has to be all the way down here, right? That doesn't seem logical. Even if my target was, let's say, these highs over here, that doesn't seem logical at all, right? I know that I'm not going to obviously go for a 1 to 3 now, because 1 to 3 means that this is a 1 to 3 risk ratio. This doesn't make sense on Euro USD, right? We're going on a downtrend. We're going for a counter trend. Obviously, there's highs over here. There's targets that everyone has over here. Why would I go and try and expect the market to go all the way up here? There's no reason for it to do that, right? So obviously in this trade, it doesn't make sense. Like the trade just doesn't make sense. And even if I did try and keep it tight, right? Stop loss tight, giving it a nice, 1 to 3 or whatever it is. This is 1 to 10. But even if I did, you can see that yes, we go towards a target. Let's say we targeted this high right here, right? This liquidity high right here, right? I target right here. I would have been up like 1 to 10 risk to ratio, and then price goes and smacks down, hits my stop loss. Why? Because I didn't give it breathing space. However, if I gave it a breathing space, I would have ended up, obviously we have to keep stop loss all the way down here, I would have ended up hitting profit. Yes, this is a horrible trade, but look how powerful, and just to let you know, the stop loss is below these lows, right? Even though it's a horrible trade, the stop loss has held strong. So even when it does wick down all the way here, our stop loss held strong. It made sure that it was not going to this level. But again, this is a horrible trade, so we wouldn't take it. However, your stop loss can make horrible trades. It can make it positive. It can still give it some life because of the stop loss, even though this is a horrible trade. And the more you practice your stop loss, the better you are going to become at execution, because then you're going to be more patient with your trades, because you know that this trade here is not valid at all. However, you could probably wait here. You got the liquidity sweep, the bullish engulfing. Probably here you can wait, right? Keep your stop loss a little bit more tighter, just below these lows. And now you've got almost a 1 to 3 risk ratio. Obviously, probably have to go over here. But you guys get the gist. Obviously, this trade it's not the best trade, but targets would be at this liquidity again. This is a 1 to 2.25. But like again, it's all about the stop loss. You wouldn't have got stopped out if this was our target. Okay, so the tips that I'll say to you guys is practice, but don't practice your targets. Practice your stop loss first. Targets come after. Everyone has good targets, especially if you're going from key level to key level. Targets are already set up, right? If I enter here 1.05 all the way down to 1.03, or was 1.04, sorry, right? That's key level to key level. That's 100 pips, right? We end up hitting 100 pips, but in this position, what's the most important thing right now is my stop loss. Do I keep my stop loss up here to give it that room? Well, it gives me a 1 to 3 risk to ratio. Doesn't make it logical. But I mean, I wouldn't mind. However, you could see that we created highs over here. Possibly we could just target maybe above here. If price goes up, we could possibly even get a better entry. And so now I've given myself a really nice 1 to 5 risk to ratio because of my stop loss. Remember, your stop loss creates the ratio, not your target. If you move your target to create the 1 to 3 risk to ratio, right, you're always gonna have like a really weird stop loss. Like if I told myself, okay, I'm gonna enter right here, I'm gonna target, let's say here, right here, and now I have to keep this a 1 to 3 risk to ratio. Well, okay, I'm gonna keep it at 1 to 3. 1 to 3 is gonna be over here. Look what happens. My stop loss is way too tight. However, if I do it the other way around and I tell myself, okay, I'm gonna sell here, sell here. I'm gonna keep my stop loss, stop loss just above here. Done my stop loss first. Now I'm gonna create the 1 to 3 risk ratio. Now we create the 1 to 3 risk ratio. Does it make sense? Well, let me draw it out. Boom, boom, boom. There we go. Does it make sense? Yeah, it does make sense. It looks like 43 pips for 14 pips stop loss. Not too bad. Ends up paying profit. Like literally doing that process again. I'll repeat it again. Enter, find your stop loss. Find your entry, find your stop loss. You have to kind of do that simultaneously. It becomes a skill. And then once you found that, your target is going to give you the 1 to 3 risk ratio. That's exactly how it's going to be. That's your process in your brain. And eventually, at your first few trades, it's going to be slow. It's going to be it's going to be difficult. You're going to be worrying about, is my stop loss in a correct position? That's completely fine. After like 10, 20, even 100 trades, I think after 100 trades, you'll be quick, rapid. Like with me now, like when I'm placing trades, let's say like I see an entry position. Let's just say, for example, like here, right? I see like a nice entry position just for example purposes. You know, I see like an entry, go for a sell. Let's say we just sold right here. Just example, guys. Like instantly, I already have my highs in place. Okay, cool. I don't want price to go there. Give it 1 to 3. Boom, boom, boom. Place a trade. We're in profit, right? Boom, boom, boom. Profit. Entered. Good. Done. Finished. Right? You'll get faster, and the more you back test, like we can go back, look for entries. You know, we got double tops here, right? We can continue looking for entries. We got like trying to look for entries on the 50-minute time frame. Okay, cool. Look, even here, like double bottom right here. Obviously, price, you know, goes up, taps the neckline. Okay, cool. We tap the neckline. Now, usually for the neckline, let's say we just enter one of here. Usually with the neckline, you can go for below the lows, but now look, like stop loss is way too high, right? So even if I did do a 1 to 3, I think 1 to 3 breaks like levels, right? This is 1 to 3. I think that's too much, right? So for this trade, I feel like, okay, the stop loss is not realistic. So what I'll do is I'll wait. I would wait for like market structure to build some sort of structure. Okay, cool. We had the break. Where do we have the break? We had the break of structure right over here. Okay, cool. Break of structure here. We pull down. Okay, now I can go for, let's say we go for an entry. You know, double bottom entry on the EMA. Cool. Now we go for the entry. Where's my stop loss? Well, my stop loss will be below the previous lows, which is here. Now does this make sense? Okay. 1 to 3, boom, boom, boom. Okay, cool. Now it makes sense. It makes sense for me to hold this trade. Boom. Here, there we go. Perfect example. We had our entry protocol right here. We know the target. The target is going to be here. We know that. But unfortunately, stop loss was too wide. So what we do, we wait for market structure. We wait for market to create more structure for us, because remember, the market is always just, it's not going to go up in a straight line. It won't do that. What it will do, it will do this: up, down, up, down, up, down. So if you missed the entry here and you're trying to enter all the way over here, instead of holding the trade and keeping the stop loss all the way down here, instead of doing that, why don't you just wait for more market structure enter here and keep your stop loss down here, and now you've had a better entry. Now you can keep the stop loss nice and, you know, at a reasonable level, and then you can just ride and continue going on with the trade. That's how that differentiates beginners to experienced traders. Okay, you need to be experienced in the market. Sometimes when you see an entry, like this is a clear entry, you know, break, retest, clear entry, like every trader will try to enter here. Unfortunately, stop loss is way too large for us. We can't hold that stop loss because our targets will be way too high. So what I'll do, I'll just wait for more market structure, because no matter how much you trade, you're going to realize that market structure is always going to go up and down, and there's going to be always a better entry in the future. And you can like look at the trade and see, okay, price went up, then it came back down again. I could have probably entered again over here, right? Or I could have had a better entry over here, or price went up, traded here. Okay, cool. I can get a better entry, tied a stop loss. You could do that, right? And so eventually you guys will be able to master your stop losses, master where your stop losses should be. And then now you won't get trades where it hits your stop loss and goes in a direction. Like, I'm sick and tired of trades doing that. Like, it got to a point where I remember, like, I was placing trades, and because I was like so fixated, I want a sniper entry, I want to get the best entry ever, I end up always having my stop loss at a wrong position. And I got sick and tired of it. I was like, you know what? I'm going to learn how to place stop losses. I'm going to learn where to put them, how I can improve on them, and understanding market structure. The reason why my charts are all black is because I want to see market structure. I don't really care about the colors on the charts. You probably see me, I probably have different colors sometimes, but when I'm in lockdown mode and I'm trying to lock in, I'm trying to make as much money as possible, I go for a blank canvas, black charts, and I lock in, and I just look at price action. I look at the chart patterns. I look at the way the markets is moving and what kind of data is giving me. Can I get feedback from this trade? Yes, I can. And then I'll place the trade. I will not place a trade if it doesn't seem logical. And if I feel like okay, I am 100% no, price is going in this direction, all I have to now do is wait for market structure. That's literally all you have to do. Wait for market structure. If you missed the move, completely fine. At least you got the right bias, and you can take that as feedback too. Next time, don't be patient. I've had multiple trades where I'm a bit too patient. I've traded and I waited for price to get to a level and it never reached that level. However, it went to my target. I could have probably entered. Unfortunately, I didn't, because it didn't hit my level, that my area of interest. And so I missed out on a trade. What I'll do, I'll say, okay, cool. Moby, I have had a good idea with the trade. The targets were on point. Unfortunately, I was too patient. Unfortunately, I waited for something to happen in the market, which it didn't, and I have to rectify that. And so now you're getting feedback from trades you're not even taking. Sometimes trades are not going to be monetary feedback. Sometimes you're going to get feedback from either a loss, or you're going to get feedback from not even taking the trade. That is totally fine. That's better than placing a trade, having a wrong stop loss getting hit, and then it goes straight to your take profit. That's the worst feeling ever, guys. And I don't want you guys to go through that. So make sure you practice. And this is your homework for tonight. Practice, practice, practice where you should keep your stop loss. Obviously, there's going to be times where you're in the wrong direction. And I'd rather your stop loss gets hit because you're in the wrong direction, rather than your stop loss get hit and you were actually in the right direction, you had the right bias, you just tried to be greedy and have a tight stop loss. I'd rather you hit stop loss because you're just in the wrong direction. The trade was just not a good trade, or you weren't being patient and there was a better entry in the later trades. I'd rather that, guys, okay? So please keep watching this video. Like, maybe put this video, maybe watch it a few times to really understand where we keep our stop loss, because I kind of did go a little bit fast on this video, but you know, you guys can practice. I don't want you to try this method on your first trade, you know, after watching this video. I want you guys to practice. I want you guys to actually actively go on your charts, look for your entry protocol, and then practice the entry. Like, literally practice the way we've done it today. I want you guys to do that. Okay, guys? But that's pretty much it for today's bootcamp video. Make sure you like and subscribe, guys. Again, if you want to join my community, make sure you click the link in the description below, guys. And we'll see you in the next video, guys. See you later.